Hi, good afternoon. You're watching Closing Trades right here on ET Now with me, Aisha Faridi. Ajay Sharma as well joining in the studios. Let's walk you through what the market price action has been. While it appeared to be a very quiet start, from there we picked up about 0.5% and now we're settling around that 21,900 odd level in trade. Today is really a very individual stock specific kind of day and across market caps. Look at what's happening in large caps, for instance. Negative commentary, tractor degrowth, guidance revised lower by M&M, but the stock undeterred. In fact, it's now at the high point of the day. 7.5% is the kind of tear that you're seeing on M&M alone. The energy basket continues to see follow-through price action. Case in point being BPCL, ONGC, both sitting at the high point of the day as well. And then too, the big star performer from yesterday, SBI, that is also scaling up higher by another 2% as we speak. HDFC Bank clearly seeing some buying at that 52-week low level. It's up about 1.5% as we speak right now. But in the negative, there's ABFRL. Poor numbers are getting punished by the market. Muthoot Finance is lower by about 3%. Z continues to reel under pressure, 6% of a cut coming in. And this falls back post its earnings and the price target cuts that came by post that. And then, of course, Vedanta as well, wherein we understand from our sources that perhaps GQG could be an interested party. A block deal, a sizable one at that, already happened in the pre-open session itself. Stock lower by about 3.5% as we speak. But yeah, the texture of the market doesn't change, Ajay.
In fact, that point which you made, despite of the reported numbers, some certain section of the reported numbers being on the weaker side as far as M&M goes, the street appears to be interested and excited about the commentary which we will run for you in moments from now regarding the new product launches or new launches from M&M, especially on their EV portfolio. Some 3 or 4 of them are lined up next few months, and that is keeping street excited. Almost 7% bump up coming in over there. BPCL yesterday, there was a OFS and big buyers came in that one. The stock has gained after that supply as well. I've been talking about how ONGC and Oil India should be on your radar because of the guidance both these managements have very recently given regarding their production volume bump up. Look at that. Oil India is up 12.5% a week back. In fact, last week they did say how the volume will improve both on the oil and gas side, and ever since that guidance has come in, ONGC and Oil India have been moving further. Yesterday, it was a bad day, a soft listing for Jana, 10-11% lower. In fact, if you would have seen the delivery volume yesterday, almost 50% of the overall share sale got marked as delivery. Clearly, the HNI and retail would have exited. And now all of that is getting reversed, 16.5%. So individual areas are doing phenomenally well. There's an energy fund, by the way, which has launched, and we were speaking with the fund manager recently. SBI is launching an energy fund, Aisha, where they would be putting in fresh money in many of these energy names, legacy energy as well as new energy. Up till now, we have not seen a dedicated energy fund. Yeah. So some follow-up buying would be coming in. But we have Nuresh and Kunal also joining us on the show. Sandeep Sabharwal will also join in shortly. Kunal, let me come to you first. Flatline, some attempt of a recovery on Nifty. What are the levels to watch out for right now?
So 21,700 is support on the Nifty. It's the neckline of the previous range we were trading into for the index. 21,500 is a major support for the Nifty, where from where we bounced off, and it also coincides with the 50-day moving average. But I think what's actually more important is to watch out on the Bank Nifty, because I think that could probably be one of the key indicators that maybe the index could come out of this broad-based consolidation. So Bank Nifty trading above 46,000 mark, and the more the Bank Nifty trades above this 46,000 levels, the better the confidence levels could improve for the markets.
Right. Look at M&M, talking about that name, almost clocking into that 1,800 per share mark. Naresh, what's the reading after this big move on the stock today?
So clearly a breakout above the last 2 highs. 1,750 was the high just say 5-7 days back, as well as in December to Jan of last few months. So 1,750 breakout indicates the next target price could be closer to 1,900, 1,950 in the short term. So any dips back to 1,750 to 1,730 zone remain a buy, and at current levels also could be a buy. Stop loss would be below 1,710.
You know, since we're on the subject of M&M, what's really fueling fire to M&M has been the commentary, not on the tractors, but on the new launches that are lined up for the year ahead. In fact, let's hear out what Rajesh Jajurikar in his commentary told us when he spoke with us earlier today.
The Born Electric programs, we've spoken about 3+1, 4 products in the pipeline. They're all on schedule, testing very well. As we drive them, we get more confident and more excited about them being truly disruptive products in the market. So they are on schedule as we put out. There's no kind of change to that as things stand at the moment, and we're very excited about the readiness of that. We hope to see them in market by early 2025. On the ICE products, we have a couple of interesting products with Thar, and we believe that really is going to be very, very exciting, and we'll get a very good feedback.
In fact, not just M&M, but we also spoke with the managements of iRadar too today. We had Narayana Healthcare as well join in on the show. So let's get a slice of what these managements have been saying in terms of projections and guidance going forward and the visibility that they have on their businesses.
The tractor business is going through an industry decline. And we have seen, on a cumulative basis this year, about a 4% reduction in the industries. We've gained some market share, so our reduction has been lower at 2%. Our current estimation for the full year is that the industry would stay in negative territory and be about -5. Hence, that means Q4 would be roughly a 10% negative growth for the industry. Some of our competitor moves may be responding potentially to what we already did in early January. We will not be responding.
I'm sure through this rooftop solar mechanism, the kind of awareness will be built up. I am confident that Kusum scheme also going to take up. When we go into retail, because retail is completely a different ballgame, but we have fully geared up now. We are getting into a separate vertical as well as separate subsidiary company. So nobody can talk about a future figure with accuracy, but we are confident of our systematic and systemic way of improving the things within the organization as well as improving the systems.
We are just trying to be more efficient in terms of our supply chain. So we want to be being able to hold reduced inventory, and we have very aggressive capex plans. We are coming out with a NCD raised soon, and we will also be raising a bank borrowing to fund our capex ambitions.
All right, Sandeep Sabharwal is also joining us. Sandeep, afternoon. Sandeep, I'd like your opinion because you do track banks as a space very closely. Just yesterday, 2 small finance banks got listed. I wouldn't go towards the more agri-focused and more Punjab or one state-focused, one capital. But I'd like your opinion on Jana, if you've seen it, 0.9 times 1 year forward price to book. Would it be interesting?
No, Ajay, I don't even look at these stocks.
Yeah.
Too much time gets consumed.
I'm sure it is a time-consuming task. Sandeep, have you looked at Indigo then? The recent numbers and the way operating metrics for airlines are coming in. Now the stock is trading lower, 2.5% at day's low. Buzz is that Mr. Gangwal's stake could be also out in the market. One of the promoters is looking at offloading some. If supply comes in, would you be interested in the stock at $3,000?
Yeah, I think so. And that's always been the risk in Indigo, that fundamentally they are doing extraordinarily well. In fact, last 2 quarter results have much beyond most analysts' expectation. So today, I guess one could be news that the ex-promoters might sell some stake again. And secondly, there have been some flight cancellations which have been forced by the regulator from Mumbai. So both of those factors could be having an impact. But longer term, I think at this price, or if it's available lower because of whatever technical reasons, it's a good bet in the Indian context.
On the subject of Jana Bank, let's hear out what the management told us when we spoke with them earlier today.
Our CET ratio was 17.5% as of September. So now obviously it will go into the early 20s, so 20 to 23% odd once we add this capital base too. Small ticket loans on a regular economic cycle are very good business to do. We are seeing 99% collections in everything we are doing now.
All right, the other big developing story is the way farm protests around Punjab and Delhi border is disrupting a lot of life there, especially transport space. We have Amrit Lal Madan, President of All India Motor Transport Congress, who's joining us now to talk more about it. Amrit Lal ji, good afternoon. Can you tell us how bad is the situation right now? We understand that your association has put out a commentary saying that a lot of important goods transport has been hit and have been impacted to important regions. Tell us, where does the situation stand right now?
देखिए, जो अभी सिचुएशन बना हुआ है फार्मर्स का, इनका क्या प्रॉब्लम है क्या नहीं है, उनके साथ में हमारा जो प्रॉब्लम बढ़ गया है कि बॉर्डर जाम है। बॉर्डर की वजह से हमारी गाड़ियों को 100-150 किलोमीटर घूम के जाना पड़ता है, तो उससे हमारी जो कॉस्टिंग है वो 5 to 10% इंक्रीज हो गई है और हमारे टाइम का जो वेस्टेज है वो बढ़ गया है। टाइम से पार्टियों को माल नहीं मिलता है, ये धीरे धीरे प्रॉब्लम बढ़ता जा रहा है। हम सरकार को रिक्वेस्ट करते हैं कि इनकी जो भी प्रॉब्लम है जितनी जल्दी से जल्दी हो सके इसको सॉर्ट आउट करें।
कौन से रीजन्स में माल नहीं जा पा रहा है, कौन से एडजॉइनिंग स्टेट्स में माल नहीं जा पा रहा है, ये बताएं। और कौन सा माल प्रॉब्लम हो रहा है मेनली ट्रांसपोर्ट में? फ्यूल है, पेट्रोल डीजल या कुछ और, या सब्जी या फल, क्या एग्जैक्टली नहीं पहुंच पा रहा है?
देखिए, जो भी मटीरियल जा रहा है ऑल ओवर इंडिया से, जो दिल्ली साइड में माल जा रहा है, जो बॉर्डर जाम है, बॉर्डर जाम की वजह से गाड़ियों को घूम के जाना पड़ता है, तो उसकी वजह से गाड़ियां लेट भी होती है और उनके चक्कर काट के जाना पड़ता है। उससे हमारे को डीजल का और हर चीज का लॉस होता है, उससे 5 to 10% कॉस्ट बढ़ रही है।
ओके अमरलाल जी, बहुत बहुत शुक्रिया हमसे बात करने के लिए। So clearly, and this is understandable. I mean, this is the logical to assume that this would have happened. But you know, last time round, when a similar agitation impacted the transport of important goods, within 24 hours, government went ahead and found a solution. And you know, before there could be long queues at the fuel stations or other places, it got resolved. Let's see how it goes from here on. But Nuresh and Sandeep Sabarwal are also with us. Sandeep, the entire PSU bank space, the way it is getting re-rated, especially after SBI results, it went sideways for a brief period of time. Then a new re-rating seemed to have started. Do you think that this could continue for some time now? BOB, Canara Bank, even down the market cap curve, SBI astonishingly is now at $800.
Yeah, so as the asset quality improvements continued, so and the PSU investment cycle has reached, I would say, a sort of a frenzied zone where people just want to buy PSUs and the rest of the market's doing nothing. So at this point of time, the valuation differential has reduced significantly. Now, unless people believe that many of the PSU banks should trade at par with large private sector banks, it's very tough for this rally to continue like this, because ultimately, in terms of competitive advantage of sustained low-cost deposits, the large private banks are much better placed than the public sector banks.
That's reading the same, because in the morning we were discussing that the move on PSBs has just about begun, right?
Yeah, it's begun. It's not into an exhaustive kind of a mode. So we look out for points of exhaustion where the indicators are overbought, whether the RSIs on the weekly, monthly are about 80, about 85, about 90 levels, depending on the time frame and the speed or the acceleration of the rally. It's not been the case with many of the PSU banking stocks. In fact, what the move today in SBI and Bank of Baroda have done is you've seen the other mid-cap names, the likes of Central Bank, Bank of Maharashtra, etc. These stocks are also seeing a recovery or a rally for themselves from their intraday lows, mid-session lows. So that confidence which gets brewed into the entire sector, I think, is the only major reason why I believe that the likes for SPI could probably continue to move up higher. In terms of technical levels, I would believe now 720, 725 which was the earlier minor resistance point where the stock took a pause, I think last week, and it had a 20 point, 25 point correction. That should now act as a support for SBI.
Sandeep, I want to talk to you about two stocks which have got broken down in the last 1 week for particular triggers. One is Aurobindo Pharma. It posted strong set of numbers, almost 1600 plus kind of EBITDA versus 1200 plus last quarter. On a QOQ, there was a big jump. But this injectable facility matter took a big toll on that and corrected from 1100 odd to almost 1000. And now it seemed to be stabilizing. The other one is Hindalco, because they also talked about their capex actually going in slower mode, execution delays, etc., impacting return ratios. Stock corrected sharply. Would you be interested in any of these two names at a lower level?
Yeah, the pharma sector as a whole has gone through a re-rating driven by lower input costs and better product prices. So the pharma sector is I would say, an ideal position today, where the product prices have moved up and the input costs have moved down, and as such, profit margins have expanded across the board. You see any pharma company, it's happened. Leave aside a very few. So then you need to buy companies where you have management. So we own Sun Pharma, and I'm comfortable holding those stocks rather than Aurobindo Pharma, where I think they have some excessive accounting practices, and then this injectable facilities issue so drag on for some more time.
Sandeep, have
What
to
was the other stock?
discuss Oro and?
Oro and Hindalco.
Hindalco. Yeah, Hindalco also has been on a tear X of this sell-off which has happened now, despite the fact that globally the entire aluminum, copper, the metal basket has gone nowhere. So the results have been decent. So I would think that it's fairly priced at these levels.
Sandeep, what's the take on HDFC Bank though? There has been some buying which has kicked in after, the stock hit its 52-week low yesterday. Would you concur with a buy here, or would you say avoid? There are many opportunities within banks.
So I would think that for people who have a horizon where they say that we don't mind a 10% downside for a potentially 25% upside when the cycle turns, it's a decent level. I am not buying right now. I would like to time it better. I'm not sure whether you'll be able to do that or not, because the overall view also is that the overall market should also correct at some stage and give up some gains. So I think at that time, the underperformers of the previous cycle will continue to fall, and that might give better opportunity.
The bigger question is, when will that fall in the market come?
Well, looking at the state of this market, it's, the demand for stocks at lower levels, even if it's a flash correction. We were discussing yesterday that it was more like a flash crash, what happened in the PSU stocks. And all of a sudden, you've seen so many PSU stocks coming back and breaking their
The very next
3-day, 5-day swing highs. So, and we are talking of a correction which is 15% to 30% to stocks, and that gets digested very easily. So the appetite of this market is very steep, very high, and not unlike the previous kind of markets where bulls used to be, just be very terrified with a 25-30% correction in stocks, and they used to take a lot of time to make a comeback.
What about HDFC Bank though? Do you see it go back below its 52-week low, which it clocked yesterday?
Doesn't look like, because I would believe that yesterday the selling was more of penultimate selling for stock prices. The data on the open interest has changed today on the positive side for HDFC Bank. For the first time, you're seeing the stock today making a pattern of higher highs and higher lows, even though it's a very minute kind of a time scale, but at least that breaks the pattern in the chain of downward trend for HDFC Bank. So the data so far is positive, but again, we'll wait out for other private sector banking stocks to start participating. That would probably add more fuel to the rally for HDFC Bank.
Look at how Medanta is shot up. Medanta is almost 6% higher, 1400. If you look at the last 1 year chart, you'll see after IPO how this stock actually has started, adding on weight, and the IPO itself saw a very softish kind of a response. Sandeep, do you have any hospital stock in your portfolio?
Unfortunately not. I think they have done very well.
Yes, they have indeed. So, see, sub 400 kind of a public issue at 1400 now. Would you be in a panic-like situation, look at adding any hospital stock? You have studied that space?
Yeah, we should. Yeah, so I have studied, I've been following, but then those prices never came to levels where I would enter. And at every stage over the last 1 year, we've seen further re-rating. So I think that's the issue now. Most of them are now at 50, 60 plus PE ratio. I think Apollo Hospitals is even higher. So, so these are steady growth companies, maybe 12-15% kind of earnings growth. So tough to buy these stocks at this PE. So maybe at some correction or sell off here.
Let's talk about some of the consumer names. Remember, we were discussing around the union budget that you have started looking or dipping your feet into some of the consumer names which got badly neglected in the market due to rural weakness, tier 2, tier 3 weakness. Today, there's a note on Jyoti Labs by one of the, I think Jeffries it is, and saying that they're hoping for a rural recovery. The stock is active, Jyoti Labs, not today, but yesterday it was active on the news that Malabar Fund is meeting them. Which are those names which you started looking at right now in consumer?
So Jyoti Labs we've been holding since 160 levels. So company has done very well, and we continue to hold. It's been an outlier in the entire FMCG space, along with consumer. On the non-durable side, I think things look more interesting. So Voltas is something that I talked of earlier, last 3-4 months, but then it's also reached a 52-week high. Right now, we have recently bought into Bajaj Industries because that's one company which has excellent management, and there we've seen over the last 2 quarters first signs of a turnaround. The management commentary was also positive. And so I think that's where we could potentially make 20-25% over the next one.
Quite interesting. Bajaj Industries, today itself, it's holding up 3% or so. Let's see what the last 52-week charts and what the last 1 month price pattern has been on Bajaj. That stock will just come up for you on your screens. Last 52 weeks, an appreciation of nearly 29% is what it's seen. The bulk of the move, of course, has come in the last 6 months or so. But Sandeep, the other two contenders that I wanted to talk about, kind of a peer-to-peer comparison, has been ABFRL on one hand, disappointing numbers. The stock got punished as well. Today too, it's lower by about 2.5%. And then Trent, it continues to hit dizzying heights. I mean, brokerages are coming out and literally apologizing out in public forums that we got it all wrong. Valuation is kind of a metric which does not apply to a name like Trent.
Yeah, everyone got it wrong except for the ones who were holding it. Yeah, there's no way anyone could project the kind of earnings that they have actually delivered. It's an extraordinary performer, I think very good performance by this management. And again, the entire Tata group, if you see the way company on company has been performing, it's really strong. On the other hand, I think the Aditya Birla Group companies have done as well, except for Ultratech Cement. And I think Aditya Birla Retail was going so well till they decided to do a few acquisitions which just bloated their balance sheet in terms of debt, and then the consumer demand plummeted. So I would have thought that results should have been better given that most of the retailers, not on Trent, but some like DMart Retail and all, etc., showed signs of turnaround. I think again it's a wait and watch for this company. But eventually, I think it will bounce back. It's got strong demand, strong. So I think it will be something interesting to look at on lower level.
Sandeep, thanks very much for your time this afternoon. But I'd like a quick check on the charts of V-Guard. Kunal, why don't you do it for us? I was just looking at the chart. In 2000, at least a year back, the price was 308. Today it's 318. There is a fundamental kind of a rebound which Sandeep is talking about. On the charts, if it breaks 320 odd, what levels are you watching out for?
Yeah, it's not done much. When you look at this from 2018, in fact, Ajay, the 2018 high for the stock is around 250 closing basis. So when you look at the entire mid-caps arena and now you're looking at just a 20% rise, 20-25% rise, it's not done much in the last 4-5 years. So there could be room for the stock moving up higher. The only zing which I would believe is missing is the strong accumulation of volumes. So I think except for the last 1 month where there's been a phenomenal jump in the volumes for V-Guard, it's almost like 2x so far over the last 4 or 5 months of average for the stock price. I believe that's the only catch in terms of the sustainability of the trend. So I believe if volumes play a catch up more, and if we see a 4x to 5x jump in volumes as compared to the last 3-4 months of average, then we could be looking at a much more stronger move for the stock.
Okay, on that note, let me also get in some closing trades too. Naresh, what's on your platter this afternoon?
So I'd go with HDFC Bank itself because that's an interesting case. We've seen a new 52-week low yesterday, and we are actually seeing a relative outperformance on a day when the Bank Nifty is not performing. So out here, it's a small stop loss at 1395 and a target price of 1450 in the short term.
Kunal, what about your strategies?
It coincides with Naresh. So yesterday we flagged off HDFC Bank, and I would suggest a hold down HDFC Bank from the call which we initiated a buy yesterday.
Pull up Max Financials. Max Financials is suddenly cracked big time right now, down 2%. In the last 2-3 minutes only the big weakness actually come in. Nuresh, can you check the charts for Max Financials? Appears something is developing there.
So looks like a one-off reaction as of now. The stock price has been sideways only if we look at the structure overall for the last few months. Every time it has broken out about 950,000 mark, has not been able to sustain. And 860, 880 is a support. So for now, no clear trend on the stock as such.
Okay, we'll take a short break then, come back and get you some more stocks spotting right after this break.
Back with closing trades, right here on ET now. Let's just revisit what the closing trades are settling in at. Just half an hour to go before we wind down for the day. Just very mildly and muted off a move on the index, but that may not be the correct picture because there are names on one hand like M&M which have perked up even 7.5% intraday today. And on the other hand, Axis Bank, which is lower by 2.25% now as we speak. ICICI Bank a drag, Kotak Bank a drag, Reliance, IndusInd Bank, L&T. The big boys are the ones which are taking a rest today. But yeah, along with M&M, there's BPCL, ONGC. They continue to, hit hard. HDFC Bank, SBI, they're looking pretty okay. And selectively, some of the technology names as well are not looking all that bad as we speak right now. Mayuresh Joshi too joins in on the show right now. Mayuresh, hi, afternoon. Just wanted to get your, thoughts on M&M's numbers. Yes, tractor degrowth, but lots lined up in the EV pipeline as well. But the point is, at a life high, does M&M become a buy even at these levels?
Afternoon, Aisha. No, I think the commentary was exceedingly good for M&M post their earnings yesterday. And therefore, the SUV market share at 21%, the expectations in terms of the farm equipment solutions market and the market share thereof at 41-42%. That augurs well in terms of maintaining that and in fact improving it going forward. So the slew of launches, the backlog that it has got specifically on the automotive side of the business, 226,000 odd units, they are expecting to have order backlog of 50,000 units per month, and they are sufficiently having sufficient capacities probably to execute almost 49,000 out of that 50,000 every month as we head into Q4. And same for the farm equipment part of the business. They're introducing 2 or 3 variants within the 30 HP tractor market, which is going to be the highest market in terms of the hectares, in terms of ownership of land as well, where 30 HP and below that becomes far more pertinent. And therefore, I think expectations in terms of improvement in the first half of the next year with these models, the new EV models that can get introduced as well, I think that occurs well in terms of the expected financials to probably stabilize and also show a compounded growth going forward. Now, whether to buy or not at this juncture, how we look at it at Markets with India, I think a tad bit higher from key pivot levels. EPS rating is excellent as we speak, and therefore I think anybody holding should hold on. Pullbacks can definitely be considered for this counter from a fresh investment perspective.
What is common between M&M and Escorts is the weak performance of their farm equipment division. Both the stocks have done the other. In fact, Escorts has come down from 32 what put up the last 6-month chart. You'll see closer to 32, 32.50. It came back to almost 28 and rebound 34 actually. So a good correction has actually panned out. What happened to that entire story of Kubota taking up, making this vehicle as a exports hub and increasing the distribution network? All of that factored in, or it will come gradually?
So Ajay, I think it should come gradually. Good afternoon to you as well. I think what really happens is the deficient monsoons and the irregular monsoons have created an impact in terms of tractor sales and the farm equipment business for the industry as a whole. So Escorts, you're talking about Swaraj, you're talking about Mahindra and Mahindra, all of them have got impacted. And now two key reasons to watch out for. One, expectation of a normalized monsoon heading into the next few months. And if that probably happens on a low base, the expectation in terms of better numbers coming to in terms of sales volumes and better realizations, that should augur well for the farm equipment business. For Escorts, I think the new variants that Kubota can also introduce, and again, lower than 50 HP, because a large part of the land ownership in India is highly skewed below that 1 hectare, which means that below 50 HP will probably work in terms of tractor and mechanized solutions. And the export market as well. I think those synergies are obviously going to get played out. But I think it is for this primary reason that the stock probably came off. So now, if this plays out to their advantage with good monsoons and all these synergies playing out, I think the farm equipment business for Escorts, the farm equipment business for Mahindra and Mahindra should recover quite smartly in the first half of the next financial year.
Naresh, let's revisit the big buzzer from yesterday, that's Nalco. And today, NMDC is well lapping up gains on the back of excellent numbers. Do you see a continued trend in select metal names?
So the trend is positive across the board. The problem is a lot of these names keep going in and out of band. So for example, Nalco was in ban yesterday, derivative ban today, mostly tomorrow it should come out. But the structure is pretty positive. The trend has been strong across last many months together. So Nalco last had topped around 130 in 2021-22. That breakout happened. We've retested that multiple times in the last 2 months, and now a strong trend has started. So it remains a buy on dips to 140 to 150 band and could continue to slowly and steadily scale up. NMDC, on the other hand, the problem is the rally has been very swift. It's gone up from 120, 130 breakout to almost 250 now. So I would wait for some bit of consolidation in NMDC to take a fresh position. But at current levels and on dips, Nalco still looks interesting.
Pull up Phoenix Mills once again. Naresh, we spoke about it, I think, 10 days back. It was a corrective phase which was happening, went to almost 26. Previous high was almost 28.10. It's 40-50 bucks away. If it crosses that, do you see it in a new territory, Naresh, Phoenix Mills?
So Phoenix Mills has a tendency to go up slowly. So every new high does not lead to a 20% bump up. But it's been a classical slow and steady trending stock right from the last, almost from the COVID bottoms. It's gone up slowly and steadily. The corrections are not sharp, neither are the breakouts. So it's a stock which you want to buy on dips rather than breakouts. So when now dips to say sub 2600 levels should be a buy.
Coming in at Phoenix Mills, let's just revisit some of the drags as well today. There's ABB, Shree Cement, Muthoot Finance, Z, and then of course there's Vedanta as well. Ajay, for the benefit of our viewers who are just joining in, what is it that you're picking up from your sources in terms of GQG being an interested party?
In fact, for the last 1 month, we understand that there was a discussion going on between the promoters of Vedanta along with GQG for some kind of a stake sale. This morning, there are some blocks which have happened. Because the names of the participants have not come out, we'll not talk about that. But we understand that these discussions could lead to a block deal, $1 billion worth of block deal, almost $3.5–4 billion is the kind of debt which Vedanta Group at the parent level is grappling with. They've tried attempts of restructuring it, repricing this debt, of course, taking out a lot of dividends as well. But still, that is bit of an issue. But recently some brokerages have started coming out talking positive that these measures may yield to some relief for Vedanta. So if this additional news which we are gathering from our sources, and the management denied any response to it, saying they won't talk about market speculation. Indeed, if $1 billion worth of block happens and the debt is reduced, then at least the message to the market would be that the management is very keen to the extent of selling some family silver as well. In order to reduce their debt. Vedanta, out of all the other metal stocks, Mayuresh, has slightly on the underperforming side. Would you get into a name such as Vedanta if indeed they go ahead and kind of manage to reduce debt in a big chunk, at least some part of it, a quarter or a third?
So as a disclosure, I do have a position here. But if you look at the charts, the problem is when you look at a Vedanta chart, it does not show you the impact of dividends. So if you adjust it for dividends, it's just 15–20 rupees away from an all-time high. So that's the problem. The stock price will look at, say, the highest 440. The stock is today 270, but they have given dividends over the last 1 year, 1.5 year as well. So technically, in the short term, it has made multiple attempts around that 280, 85 mark. We went there in December, in January also. We were there just a few sessions back. So sustaining to 80, 85 would be a strong breakout. On the downside for the last 2 months, 250, 55 is a strong support. So for now, it's a range-bound stock. But if you look at a chart on a dividend-adjusted basis, it looks pretty interesting that it's closer to a 2-3 year high. So watching it out, keeping a stop below 255, expecting it to eventually break to 80, 85 levels.
Would you look at it fundamentally?
So I think two aspects here, Ajay. One, I think the price reaction on the downside was primarily on the reason that you just alluded to. The bond repayments that are expected to happen for this financial year and the next financial year. Obviously, they need to have a lot of restructuring done on that part. They have taken a lot of cash out of Hinzing's books, and therefore I think there is no much cash to salvage from Hinzing's balance sheet as we speak. To top that up, if you're looking at how the Chinese recoveries and LME prices still expected to take at least 2 quarters in terms of price recovery for key commodities. And therefore, the balance sheet operating leverage will take the second half of this financial year to probably come back in a significant fashion. Having said that, any news on this front, if it turns out to be true, I think it plays out positively on two aspects. One, if the promoters do sell their stake and get that much amount of money onto their balance sheet, it reduces debt. And at the same time, some part of that money can also be used to reduce the pledges that they probably have. And that creates a huge amount of difference as far as their interest servicing is concerned. And the second aspect in terms of fulfilling those bullet payments or the debt obligation before timelines will also give confidence in terms of the parent's health and the subsidiary, which is Vedanta as we speak on this front. So yes, I think if this news turns out to be true, I think it should turn out to be sentimentally positive for this stock.
Kunal, what's happening in Torrent Power? Out of all the other utility stocks, this one is not very often discussed. Is this a breakout which is happening?
Yeah, it's a breakout for the stock. 2 days back, it was almost 1,050. Today, it's almost 1,200, 1,250 for Torrent Power. Good move for the stock in the last 2 days. Today's volume is also quite encouraging, and this probably indicates that maybe the stock is getting to a breakout. So I would probably wait out for the 1225, which is today's high. If the stock closes above this level, say by today or tomorrow, then I would believe that that could be a strong confirmation of a breakout. And we could be looking at least a 100-point move further from 1225 levels for Torrent Power. So maybe 1350 broadly as a target for the stock. But closing about 1225 could be a trigger for the stock in terms of a breakout.
Look at some of these price volume breakouts that we're flashing for you on your screens. There's, of course, Aster DM helps. Look at what's happening on a rate gain, for instance, that spiked up all the way over 7% as we speak right now. Aster DM as well is seeing a 7.5% surge for itself. And you know, the entire wires and cables space, which really got marred with, you know, some interrogation news which actually came by. Look at Polycab. It's actually surged quite a bit. And in fact, it's seeing a very sharp intraday surge. Polycab is the stock that I'm talking about. A very lackluster day up until, I think, the last 15 odd minutes, where it's shot up a good 5% as we speak right now. Naresh, what's the reading on the charts of a Polycab? RR cable, I'm sure you don't have much data.
So Polycab, for now, after that big cap down, it has consolidated in a very tight range. If you look at it for the last almost 2 weeks, 44.30, 44.50 was the range on the upper end. Crossed above that, and we could retest the gap down levels of 4800, 48.50, which is where actually one needs to get out rather than play this trade. So it's a risky trade because once you see such big gap downs, there can be again further gap downs as a risk. So out here, if one wants to take a risky trade, have a strict stop loss below 4400 and look at 4800 where you want to get out.
Polycab made on that afternoon of interrogation by regulator was 38 or 3900 thereabout. Then there was a sharp rebound and consolidated. Now we are building upon those gains. Another stock in the private banking space is Federal Bank. There has been a lot of talk around a leadership change there for some time now. Again, those kind of talks are revisiting the market, and the management has clarified too. But pull up the chart of Federal Bank. Good numbers this time around, 5% higher. Kunal, going to what levels?
Yeah, this looks interesting. This looks like a breakout for Federal Bank, and purely over the last 2 days, what you see there is a V-shaped recovery. You know, Federal Bank is a very low beta stock. So for a stock to move up higher, even by margin of 10%, it may at some point of time even take 3 to 4 months. Now, when you see a V-shaped recovery for stocks in the last 3 weeks, 2 weeks, we've seen that happening for Federal Bank, where from a point of 140 odd, the stock has now come back towards 155 mark. The swing high for the stock is 163, 164. So I think in that aspect, we could be looking at the swing high being tested for Federal Bank, which is closer to 164 mark.
Okay, that's the take coming on Federal Bank, holding up pretty smartly. SBI has now perked up a good 2.5%, and HDFC Bank as well is at the high point of the day, a solid 2% move coming in on that stock as well. Mayuresh, we were just stacking up SBI and HDFC Bank, and what's going to have a more sustainable, meaningful move? Which one would you pick out of the two?
So purely going by price action, it seems to be SBI at this point of time. But I think what has really transpired in terms of numbers for both these entities, State Bank has given a very decent set of numbers, except for a couple of those pointers. One, I think the one-offs in terms of the wage provisioning and slippages, which increased a tad bit on a quarter-on-quarter basis. But the management sounds very, very hopeful in terms of Q4 performance being far, far better. And therefore, the expectations in terms of asset quality pressures, both in terms of fresh slippages being added, the kind of provisioning that they've done, the credit deposit ratios, and the cost to income ratios heading downwards. I think all these are pointing out to better numbers as the management speaks from Q4 onwards. And they will also be having a huge advantage in terms of their pegging of the MCLR. Where once the asset repricing starts happening with rate cuts at some point at the end of the calendar year, should start abetting the NIMs and spreads in a significant manner. Again, from a valuation perspective, reasonably placed among the larger banks. For HDFC Bank, again, I think it's all about the next couple of quarters in terms of how much of a recovery can they exhibit, specifically in terms of deposit growth. The management has been very, very clear. They're not going to chase growth, and therefore they are going to be very, very conservative when it probably comes to lending at this juncture. And therefore, there might be a muted set of numbers over the next couple of quarters. As we head into an interest cut scenario, I think the risk-weighted assets, along with expectations of synergies with HDFC, both on the revenue and the cost side, should start catching up. So it might go through a consolidation phase. SBI might outperform during the next couple of quarters compared to an HDFC.
That's SBI as well as HDFC Bank mapping 3 months move itself, when HDFC Bank has done barely nothing and SBI has perked up a good double digits. Just a couple of stocks as well, which have been moving up ahead today. While of course some of the technology names as well have seen a bit of a move, but sectorally, one would say, led by M&M, even a Tata Motors, Maruti, they've all in any case been doing pretty okay. Maruti is now back to those, I think, 11,000 odd levels already. Tata Motors as well holding out okay around those 920 odd levels as we speak right now. Naresh, let's get a chart check going. Not M&M, that we've discussed in any case, but Maruti and Tata Motors.
So at the current point of time, Maruti remains the best bet. If you look at it, what has happened with a lot of auto names, rotation one by one, everything has done well. Maruti made a top around 10,000 in 2018. And then for the last 5 years, multiple attempts, it could not do so. Broke out about 10,000, went to 11,000, did a retest of 10,000, and we are back above 11,000. So this is the classical breakout, which could take it towards the 13,000 mark in the short term and maybe higher. So out here, it's a buy at current levels as well as on dips with a stop loss below 10,400. So looks promising. The next leader in the auto pack could be Maruti.
From the oil and gas space, but from the private explorers is Ceylon oil exploration. It went to a good corrective phase and then has come back above the 500 marks, higher by 6% today. Nuresh, last time it peaked out around 540, right? Have you looked at this one?
Yeah, so it's an interesting case with the management change, and the trend after that, the stock broke out about 350, 400 levels and it's continued. In the short term, once it's making a fresh move above 550, that is where it would be interesting. For the near term, it looks like 470 to 550 is the range. So going forward, whenever it breaks 540, 550, that's the time you want to participate into the stock. We've started seeing exploration stocks do well. So this is on radar for a breakout going forward.
Interesting name, Ceylon Exploration. Let's see what the volumes as well have been and whether volumes also have seen a perk up and not just the price action on this stock. You know, while we've already addressed what the movers have been today, there's also Yes Bank. While Federal Bank is moving the way it is, and we were talking about Vedanta having that sizable block deal, so was the case with Yes Bank too. Almost 1.5% equity changed hands earlier today when you had a block deal worth about 1129 odd crore rupees, which took place in Yes Bank. Now, I don't think it's pertinent to bring up today's price action. What you need to see is what the stock has done in the last 1 month, or for that matter, the last 3 months or so. Mayuresh, curious to know if you've tracked the story in Yes Bank and whether this could be the next turnaround story in the works.
And a lot of people are expecting that, Ayesha, very frankly. And what is really transpired is a lot of news surrounding this stock over the past few weeks. So what actually comes out or not is something to be seen. Core numbers have been quite okay. I think nothing great to write home about. And therefore, I think the expectation that one really builds in from Yes Bank in terms of a very strong recovery, and that recovery coming in a quarter and sustaining it every passing quarter after that, that has not really happened. And I think analysts are still waiting for those couple of quarters of sustainable recovery to come through on most parameters, because some of the parameters do okay while the others do not at some point of time, which means it becomes a very mixed set of numbers that the bank probably reports. So at this juncture, we are like the market, I think, to a large extent, skewed selectively towards mid banking PSU stocks and a few of the mid private banking stocks. Yes Bank, I think, will wait out for quarters numbers. I think large part of the news and the price action is based on a lot of news surrounding the stock at this time.
Okay, Mayuresh, we'll let you go on that note. Thanks as always for taking the time out and joining in. Let's get some BDST trades as well going before we wind up for the day. Naresh, what's on your list?
So first is a buy on HDFC Bank showing outperformance, stop loss at 1395, target price of 1450. Second is a buy on Infosys, which has given a triangle breakout right now. Could see further momentum tomorrow as well. Stop loss at 2670, target price of 2800.
What about your BTST ideas?
So it's Asian Paints, which I'll be bullish on from here on. The stock has been beaten down significantly in the last 3-4 months, but it looks like that the stock is forming a major bottom. Indicators oversold, and so I think a lot of positives for the stock price. 3100 as an immediate target, but expecting at least 3200, 3250 over the near term. Stop loss at 2940. And the second we buy on Federal Bank, discussed this earlier. The stock is at a breakout point. So would suggest a target of 164, stop loss at 152 now for Federal Bank.
I wonder what Indiabulls Housing is actually closing in, for the day. While of course, there's lot other things that are developing at Indiabulls Housing. But just looking at their earnings, their AUMs saw a dip of about 4.25%. Disbursements as well saw a slip. But then that's again what happened in the last 3 months. Indiabulls Housing will just come up here on your screens, closing in with that 1% gain mark. I don't know why we're flashing those futures rates though. But that said, today of course the stars have been M&M, BPCL, ONGC, NTPC, which have gone home with very, very steady gains, as has been the case with an SBI too. HDFC Bank has seen decent amount of move. And then some of the metal names, NMDC, Hindalco, they as well have looked quite okay. Want to check in on what Nalco as well is up to and whether that's seen any follow through from its yesterday's move. That as well has seen some amount of buoyancy. 156 plus levels is where it closes the day with. The laggards then, and that's also been a bigger list. Axis Bank 2% lower there. ITC as well goes home with a dip of about nearly 2%. Unilever, Britannia, L&T, Bajaj Finance, Adani names, ports, enterprises have done nothing. Reliance took a breather, was down about 0.5%. And ICICI Bank as well weighed heavy today. About a 1% downtick is what ICICI Bank too has closed the day with. To the liquid movers then, and ABFRL definitely saw earnings reaction, was down 2%. MFSL, Muthoot Finance, Vedanta post that block deal, 4% lower is where that stock is shutting shop. And then Z as well, which closed in lower by about 5.5% or so. HPCL, Emphasis, Federal Bank, these were all your big buzzers in trade. Want to check in on what are Sun TV, Gateway Distriparks, Capacity Infra, Confidence Petro, Axis Cades Tech, these were all some positive earning reactions which came by, although most of them did not really quite see a sustained move coming in. There were also weak numbers from a Gland Pharma. Paytm, of course, continues to see earnings downgrades trickling in, and that fell another 5% or so in today's trading session. 325 is where Paytm is. And then Alembic, Narayana Healthcare as well were some of the earnings reactions. But with that, we'll wind it up right here on this edition of Closing Trades. Thanks for watching.